Good morning, everybody. It's Brian Fitzgerald from Jefferies Fitz Internet team. We're happy to have with us here today Blucora. I'm pleased to introduce Bill Ruckelshaus from Blucora. They operate two leading internet businesses, InfoSpace, which provides search and monetization to over 100-plus global partners, and TaxACT, which provides online tax prep for both consumers and professional providers. Bill has served as Blucora's president and CEO since 2010. He's been on the board since 2008. Prior to that, he was CEO of Audience Sciences, and prior to that, he was running Expedia's M&A, strategic development, and business dev arms. And so I'll leave it there. I'll turn it over to Bill.
Thank you, Brian. We have some slides, and then I'll quickly go through these, or try to go through these pretty swiftly, and happy to answer questions on the back end. So I'm joined today by Eric Emmons and Stacy Ibarra from the Blucora team. We came from Seattle earlier this week, where it was 80 degrees, to rainy New York, so I'm not sure we brought the weather with us. We went to the basketball game last night, the Knicks game, and we all were discussing what a great idea it might be to have a professional basketball team back in Seattle, so we're going to mention that to the mayor when we get home. So, as Brian mentioned, Blucora, we're a public company, Bellevue, Washington headquarters. The longer-standing business within Blucora is InfoSpace. It's a search distribution business. We work with the major search engines, Google and Yahoo in particular, as well as some others, and bring those search solutions both to owned and operated properties as well as to a network of distribution partners. I'll get into that in a little bit more detail. We have gone through a bit of a transformation in the last 12 months or so with the acquisition of a second business, TaxACT, different market. It's digital do-it-yourself tax preparation software. Compete with TurboTax and H&R Block in the growing market that is digital tax prep, online tax prep. We have a very good team that's got a bunch of background operating online businesses, and we have an investment focus, which I'll talk about in a little bit. You can see a little bit thumbnail as to financial profile, reasonable amount of cash that can help us on the investment side. Some of it recently raised. About 230 people. The evolution of where we are today, early days was under the name of InfoSpace. We were an early internet IPO, late 90s, and went through the correction as all companies did back then, and spent the middle innings of the 2000s responding to that, streamlining a lot of things that had been built up earlier on, and did some acquisitions, some divestitures, shutting down some businesses, but I think nicely recovered from the correction. And then the more recent phase is really with the introduction of the TaxACT acquisition in early 12. You chose that as an opportunity to rename the parent company to reflect the fact that we're now in two separate businesses, and that brings us to present day. A little bit on the two businesses. So InfoSpace, as I mentioned, is in search, specifically working with large search engines. We don't own and operate a search marketplace ourselves, but instead serve as a trusted and longtime channel partner on behalf of folks like Google and Yahoo, Bing, as well as Yandex. And the operating performance of late has been very good. There's some dynamics there with respect to distribution partners that I'll touch on in a little bit. You can see some of the financial performance as well. It's been performing well over the last few years. TaxACT is an Iowa-based company under 100 people that is a team that was originally in the tax space back in the CD-ROM days, the do-it-yourself tax space, under the name of Parsons Technology Group, which ultimately sold Intuit. So this team, which reformed post the Intuit integration, reformed a company called Second Story Software and introduced TaxACT, was really a second mover with their original incarnation inside of a company that the industry leader in Intuit bought. So they had very good lineage, very good industry understanding, tremendous tax people. The tax people are the product people at TaxACT, and they've had good performance. We can talk about that in a little bit. So what's going on in tax that we find TaxACT to be an interesting business to acquire, and why did we think we could be successful owning TaxACT? I think more than anything was the market dynamics. So what we see going on in tax preparation, obviously it's a very seasonal business. We just came out of tax year 12 in mid-April. The trend for a long time has been overall filing population growth of a point to a point and a half, depending on the employment environment. That can change in any given year. Historically, there have been a significant, a greater than 50% segment of that filing population that has used some form of third party to help to assist them do their taxes. The formal representation of that is someone is co-signing your return. Think of that as historically 60% of the filing population. 40% has historically done it themselves or been DIY. DIY initially was pen and paper. It then moved in part to digital in the form of CD-ROMs. The latest digital is, we think now, moving to not just online, which is predominantly where TaxACT plays, but ultimately cloud-based and multi-device. That's a little bit of the progression. The category is shifting to digital do-it-yourself. And some of that shifting attributes to migration of pen and paper within the DIY category overall. But we also think that there's demonstrable proof that there is a progression as well from the 60% segment that's moving over to doing taxes on their own. Some of that is aided by demographics as younger filers come into the filing population. They're more tech savvy, and to the extent that the providers like TaxACT can bring to them solutions that are seamless and that can integrate with their increasingly digital lives, then that's a good place to be. So we really like the market. You can see digital do-it-yourself now represents 36% of overall filing. And then what is it about, against that market opportunity, that we liked about TaxACT? What was it about their product and the business and the team that we thought was differentiated? First of all, in the course of our primary research on the business, we uncovered that there is a very strong brand following around TaxACT, excellent net promoter scores, and lots of feedback from consumers that the things that TaxACT was good about, what they found TaxACT to be delivering, were the very things that were driving the decision on behalf of consumers as to which methodology they might use in a given year for tax prep. And specifically, we found that to be ease of use, accessibility, and reliability. There's a fourth component of the TaxACT value proposition that has to do with this superior value, and not to be underemphasized, which is price. So TaxACT is a price leader. They are what we believe is they represent a more fair price for the entirety of the tax filing population. 90% of the filers out there would be moving to a more fair, better value by moving to TaxACT. And to the extent that that fundamentally is true, and we're able to message that in an appropriate way and get our community of filers to message that, then that feels like a good tailwind to be benefiting from. You can see a little bit of the side-by-sides in terms of these are actually ARPU, but they're a pretty good indication of what the relative rate cards are of the various providers. And lastly is we think demonstrating the brand and demonstrating the value and the product features is the fact they're able to retain filers at a very healthy rate. And we think competitive, certainly competitive versus some of the much larger players in the space. So here's a listing of their offerings. Core to their offerings is a free federal filing for everybody with zero exceptions. And so since the mid-2000s, TaxACT has allowed filers to come in regardless of their AGI or filing complexity and file their federal taxes for free using the TaxACT solution. So quite differentiated. A number of other players have started to message around that benefit with exceptions. And so wouldn't be at all surprising for folks in this room to go to competing solutions and find that not to be true, falling in the exceptions category. In our case, we really do consider that sort of a bedrock component of the value we bring. And then there are also paid offerings that sit alongside that core free federal offering that by and large filers opt into and find value in. And then more recently we've this season introduced an increasing array of ancillary offerings around the tax prep filing to complement it and bring more value to filers. And we're finding that to be, there's a lot of runway in that area. So how do we do this 3-year progression? Our business serves not just consumers, which is what we refer to on the left-hand chart as DDIY e-files, but also paid professionals. We have a semblance of our software application that we take to the paid professional channel and allow them to use that in connection with servicing their client base. When factoring both of those segments of filings, TaxACT accounted for 6.5 million e-files in the tax year 12 season, recently completed in mid-April. You can see how our market share has progressed both with respect to the overall filing population, but also within DDIY. We think we gained share this season. We talked about that in our earnings call last week. And so all in all, against the KPIs that we measure, retention, monetization, new filer acquisition, we felt like it was a successful season. We were also able to enter the market with some mobile offerings, both smartphone and tablet, that we think showed promise and the opportunity to start to work with our filing population and new filers across a greater variety of touch points. Search. So this is the InfoSpace business. This is a schematic to kind of give you a sense as to where we sit in the value chain. So advertisers come to search marketplaces. Here we have it listed as Google. They're not the only engine that we work with, but this is illustrative. Advertisers come to a search marketplace looking for two things. They're looking for return on investment against defined goals, whether that's CPA or otherwise. They're also looking to put as much money as they can put to work against those goals. And so they're looking for liquidity. And Google will be able to, in this case Google, or any search engine that's running a marketplace, will be able to deliver against those goals by delivering performance, but also against defined amount of volume. And where do they find that volume? They find that volume against their owned and operated channels, but they also work with third-party channels to deliver a portion of that volume. That's where InfoSpace comes into the supply chain, where we essentially work as a channel partner on behalf of our search partners and bring volume back to the search engine and drive liquidity into the search marketplace. So our strategy and our go-to-market is predominantly partner-based. We do have a smaller component of our business that is owned and operated in nature against some owned and operated search sites and search properties, but it's predominantly partner-based. We work with over 100 partners. You can see some of the categories that they fall into, and those partners are engaging directly with users, consumers who are coming to their media properties and in part searching. And when they search, we are the private label results that get displayed against in response to those queries. When in response to those results get shown, there's a click on a paid ad. That's a revenue-generating event. You can see how the flow of funds works across the top. So the value proposition, succinctly, for InfoSpace is we have a number of different relationships with the search providers that we work with. We pride ourselves in offering a lot of hand-holding, a lot of customer service. Some of that is automated, some of that is on the phone and in person with the partners we work with. And we also believe we can bring better monetization, better content to the parties that we work with as a result of our working with multiple search result sets and not just one. So some financial highlights. This is laddering back up to the total company. We've had strong revenue growth, as I mentioned, in InfoSpace, 27% CAGR from 10 to 12. TaxACT is a consistent double-digit revenue grower. The businesses are very profitable, 20% adjusted EBITDA margins across the entire business. And we feel like we have a lot of levers to generate value for shareholders. Here's some of the reported results on a trended basis. You can see as a result of not pro-forming, there was these results. You can see the impact that the acquisition of TaxACT had for us. So how about capital allocation? We have a reasonable amount of cash on our balance sheet. We think about it in three ways: investing organically against our businesses. There are a variety of things we're looking at within TaxACT and InfoSpace that can extend what we're doing in those areas, and some of those are kind of normal course. Some of them fall in the category of 2 and 3 year bets. And so we think about investment, first and foremost with respect to the businesses we own and how it is we're able to, complement or extend those businesses. Acquisitions continues to be a focus for Blucora. It's something we obviously did early last year in the acquiring TaxACT. I'll talk about sort of the flavors of M&A that we think about, and the lens is really where do we think we can be successful with an acquisition. And then in the other category, we announced a share repurchase program earlier in the year of modest size, but we are going to be thinking about return of capital by way of buybacks when we feel like it makes sense. Of TaxACT, and I think the idea is that there are businesses within Blucora that can be very successful, have a reasonable amount of continuity with respect to strategies they were pursuing on a standalone basis, but come into Blucora and be even more successful. And so the model is very much one of owning different businesses and having a parent company that is smart enough to know where they can be of help, where they can get out of the way, how they can provide resources or introductions. Shared services is a constant question that we're reevaluating, and certainly if you ask the TaxACT guys, I think the fact that payroll and commercial contracting and things like that have migrated to Bellevue, I think they had no tears about those things parting, but the core functions continue to remain within the TaxACT business and purview, and that's just as it should be. And so that's really the model where we're migrating to, is owning, not just one business. We like the InfoSpace business, but we also think that shareholders can benefit as we move toward owning multiple businesses if we get it right.
You mentioned that these businesses would do better under Blucora. Can you say what the reasons for that is?
Yeah.
What you will offer them?
Yeah. So look, that's the proof point, which is first and foremost, our ability to bring resources and enhanced cash conversion. That is an automatic benefit. It's somewhat of an easily calculated benefit. On the softer side, it's what management skills, what best practices can we bring to these businesses that allow them to move from the stage where they are to the next stage. And I think we're early in the TaxACT integration. I think the benefits that we'll realize with TaxACT will be the result of multi-year efforts. We're pleased with the first season together, and one of the things that we're able to do in the off season is help them, I think, resource the things that they had wanted to pursue, think expansively about maybe funding more things in a given season than they might have initially, and then also making introductions outside of the immediate network that they had built up that we think also, whether it was this past season or in future seasons, can allow them to grow more quickly. Any other questions? Happy to answer.
Thanks. A quick one, Bill. You monetize through Google and Bing and Yandex, do you notice any difference in monetization rates between the different search providers?
Yes.
Any trends? Are they closing or expanding in terms of how they monetize, or any trends internationally, U.S. versus Yandex?
Yeah, so I think geography has a big, is a big driver of the answer to that question. I think, and a lot of this is sort of out in the public domain, talked about by various players in search. It is a much more competitive market in North America than it is internationally. And I think some of the investments that you're seeing on the part of Bing are resulting in, better monetization, better search product. And so we're pleased with that because we work with Yahoo Bing. The CPC environment is something that gets talked about quite a bit. And our take on that is it really does vary by category. And so to speak to that at any given point in time in the aggregate is there's so much that goes into a given CPC trend that gets lost in that discussion. But generally, both with respect to volume and rate, we're seeing the international markets continue to be sources of growth for us. And then domestically, the value proposition that we're able to bring in terms of being multi-party is really enhanced. And we're pleased that there are, we're pleased with our partnership with Google, and we're also pleased that there's, a deep-pocketed, committed player in Microsoft out there that's also, making it a healthy market in North America too. Thank you very much.
Hi, Bill. Just wanted to ask, in terms of the search business, about 45% of your business or so is 5 customers. What inning are you in terms of the white label business and the partner business in terms of reaching out to new customers? Have you scratched the surface? Do you feel it's a more mature market? How would you describe that?
So I think that the distribution network, which comprises the vast majority of our revenue in search, has been, we think about new business that we bring to that network, and we talk publicly about the revenue in any given year that was derived from partners signed in that current year. Last year was very successful from our perspective in that regard, which suggests that to us certainly that there's a lot of greenfield opportunities out there in terms of developers who are innovating and can find ways to generate audience and in part monetize that audience through search partners like InfoSpace. We are on a year-to-date basis also finding that to be the case, in terms of new partner revenue. And then I think ultimately mobile is going to be a big opportunity in that regard as well, but it's early days in terms of our mobile migration. Great, thank you very much. One of the things that we've been
are very different. So can you, who do you want, what do you want to be known for? What's your overall strategy?
So I think, and it touches on the last slide a little bit, is